Our coverage of the World Economic Forum in Davos, Switzerland, and our own Brian Sozzi spoke with S4 Capital founder and CEO Sir Martin Sorrell and got his take on the recent downturn in tech stocks. But first, he asked him about the focus of the conversations at the conference. Let's take a listen.
Two big issues, the war and US-China relations. I think everything else has sort of really taken a little bit of a backseat. Things like climate change, obviously, front and center around everybody's agenda. But in these conversations, I think the two issues that people are focused on is the war and US-China, and the lack of relationship between the US and China, I think, is particularly troubling. Obviously, Ukraine and Russia, the Russian economy is about $1.5 trillion. The Chinese economy is a totally different level, around 14 or 15 trillion. So I think that's where people's minds are.
A lot of talk coming into this event was potential U.S. recession. Is Europe in a recession? But then midweek, we got thrown a real curveball on that Snap results, and I think cast a lot of.
Well, we've got to look at two things. You're talking about the digital economy and a recession. It's two different things.
What did that report, as a advertising legend, what did that Snap report tell you about the state of the industry?
Well, you can't generalize from Snap. You have to remember that Snap, in the order of things, is about $5.5 billion in terms of ad revenues. The global ad revenues last year were $450 billion, and a forecast to grow this year still, despite GDP growth rates coming down from 4 to 5 to say 3 plus. The IMF, the World Bank are at 3 plus, and may take it down further. But despite that, digital growth rates are sort of forecast around 15% for the world and about 20% for the US. So there's a continued shift from analog to digital. Having said that, Snap at $5 billion, Google was at $215 billion last year, Facebook at 115, Meta at 115, Amazon at 31. So those are the three dominant platforms in the ecosystem. You can't generalize from Snap because it is smaller. You can't generalize from Snap because they're top of the funnel about brand awareness rather than performance and delivery. So it's not a good signal. I mean, everybody gets depressed by it, and everybody looks at valuations as a result. 40%, and it's had an impact across the sector. So a little bit of a rebound today, but no, it doesn't do good for confidence. We'll be reporting our Q1s on Monday, and you'll see what happened to us in Q1. Q1 is historic, and people are now looking at what's going to happen the rest of the year. Earnings of companies in Q1 surprised to the upside, I think. People were expecting the S&P to be up about 8%, and it came out at around 10%. Analysts' forecasts for the year have not really adjusted for client companies. We may see some adjustment downwards, which will involve some correction to people's thinking. But the digital economy remains pretty robust. The top line growth remains pretty robust. Tech companies are here. We've had conversations, obviously, with the big tech platforms here, and they remain in pretty confident mood. So Snap, I think you have to look at it in the context of the IDFA Apple effect, which obviously affected Snap historically and may have affected them in Q1. I'm a little bit confused as to what happened there. There was an employee communication, I think, was part of it. And then there was the JP Morgan conference where Evan Spiegel said, gave effectively a profit warning.
That Apple privacy, that changed. We've been hearing about that from the big companies past 2 quarters as a major headwind. Is it over?
I would say, you said major headwind. It has had an impact. It's actually driven ad revenues to Apple. I think we calculate they're probably doing about $10 billion.
So they've benefited.
They've benefited, but through that change. And I think long-term Google benefits because deprecation of third-party cookies and indeed the IDFA change does a couple of things for clients. It drives clients back to first-party data. That solves the privacy issue and the consent issue because it's consented data. And it drives clients back to the platforms and to the signals from the platforms. So first-party data plus signals from the platforms becomes the major data sources that our clients will use when they're developing targeted advertising. IDFA has had impact on Meta, on Facebook. We'll see what happens with Facebook and Meta in Q2, but that's had impact, and it's had impact on Snap as well. The other thing, of course, is that Twitter has gained ground. We don't know. We haven't got, it's not Twitter, sorry, TikTok has gained ground. We haven't got data on ByteDance and TikTok. There's some data going back, I think, to 2019. It suggests they were doing about 20 billion of ad revenues, but that was probably 100% China. But we have seen very significant growth in TikTok, and that has affected Snap and to some extent Facebook. But what you're going to see with Facebook are they're going to monetize Reels, which is their answer to the growth of TikTok, and indeed also against Snap. They'll be monetizing that and developing that at Cannes and beyond, and I think you'll see and business messaging too, and I think you'll see some interesting developments from Meta and Facebook as well.
You mentioned Twitter, and the saga continues there between Twitter.
That was a Freudian slip.
Yeah, of course it was, and Elon Musk. But let me ask you this. Do you think Twitter could be successful if it is no longer reliant on ad revenues, as Elon is?
Well, I'm a little bit puzzled by that. So because the maths puzzle me. I think Elon said he was going to drive the revenues up, quintuple the revenues. So if they're at 5, that would make 25. I think he said he was also going to drop the advertising from 90%, about 4.5 billion, to 50%. Well, 50% of 25 is 12.5 billion, which is almost a tripling of ad revenue. So I didn't quite follow the logic there. Mm-hmm. But of course, if you have a free, let me call it a free speech network platform, clients are very worried about brand safety and having their advertising positioned against controversial content. So it will make advertisers more concerned about a platform that is more open and less controlled, or less editorially controlled than it should be.
That was Sir Martin Sorrell, S4 Capital founder and CEO with Yahoo Finance's Brian Sozzi at the World Economic Forum in Davos.